Alright, this is your novice unicorn here. This is not investment advice. I am a novice, as my name states. But, man, I got so much chatter from people on the current market, so I figured I would just throw this out there. My analysis. And this difficult one because the market is very volatile. And it's kind of a you got day traders fighting whales, long-term whales, and so I just want to break down a couple of trades and my analysis on them. I'm probably wrong, so don't follow it. Uh, but I make a living. Number one thing I am seeing is a lot of new traders. People are saying, hey, this is the first time I'm buying a stock. Should I buy this? And I say, how much capital do you have? And they say, 500, 1,000, 2,000, and, what determines a good trade? Now, I'm going to say a lot of things that are counterintuitive. But, until you learn risk calculation and how risk calculation is actually responsible for profitability, you're going to trade flat, lose money, get lucky, those kinds of things. But people that calculate risk and understand how risk works on total capital are the ones that make money. In NYMT, which I've been hollering at people to buy it. I mean, every green tick you see here is one of my buys. You nobody's beat me on these buys, but I mean, maybe a few, but right now after hours, this thing's trading right about here, 239, I think it was something like that. But these blue lines here are your fib levels, which is our kind of a mathematical equation which determines movement. And you see that we ended the day literally within 1 cent of the fib level that I projected. And this was drawn before we even got close to today. But you can see these blue lines basically resistance levels or support levels, that kind of thing. This market is probably one of the best markets to trade. I shouldn't say markets. This sector is probably one of the best sectors to trade in this market. And if you are looking for where do I put $2,000, and you have two options. You can buy it $2,000 here and hope for the move up. But honestly, well, based on after hours positions, this level is probably going to hold. But you have this downside, a triple retest of the bottom is very possible. There's no one in the market that's going to tell you absolutely what is going to happen. If you have somebody in the market that's telling you that they know exactly what's going to happen, they are lying. So that's one of the first rules. The second thing you got to understand is what's your length of trade timeline. When I bought these positions, I am looking at the total market for a long period of time, and I'm looking at this. I'm looking at the fact that this thing is traded at $6 for an extremely long time. So my timeline, I'm buying these positions pretty much to hold forever. and I would have made a lot more money if, my positions, uh, you know, if I'd taken these positions here and sold right there, and then bought back in here and sold up here, and bought back in here and sold up here, I'd be much further ahead. But it doesn't matter to me because my trading timeline is much further than through weeks. When I'm putting these positions on, I'm breaking them up for a very long timeline. I am looking at a timeline which takes my positions up to 400 some odd percent return, and I can wait. Well, it's moving a lot quicker than most would think, but I can wait. I can wait a month, 3 months, 4 months, 5 months, a year to make a 400% return. I am okay with that. And so when people are like, "What should I do with my current $1,000 or $2,000 position?" is different than what I am thinking about. What you need to know is that the persons, the insiders that are in charge of this fund, really don't want to see this drop below $1, because when they drop below $1, that's a really accurate draw. When it drops below $1, they face the chance of delisting, and they do not want to delist. So the perfect buy is $1, which is where the heaviest positions I have are at. And so the current state of the game is that when new money is fastest to leave, and because people that are trading on a long-term timeline don't particularly care what the weekly or daily move is on the stock. They're trading for life. They're trading for 5 years. They're trading for 10 years. They're just throwing money. They're just throwing money at the wall, and like spaghetti form, and seeing what sticks. I will point this out. My trading system is very good. My equity curve is solidly up pretty much indefinitely. My metrics are MACD, our relative strength index, and checking money flow. And the MACD is well below the 0 line here, so there is downward possible pressure. The pressure on the stock is definitely downward right now. It just is. When you see the money flow curve start to invert, that's bullish. When you see the RSI 14-day, which is the black line, above 50%, it's bullish. When the 3-day RSI, which is this purple line, is very high, it's bearish. So if you look at this particular day right here, when I bought the crap out of this stock, thank you very much, both of those were extremely low. And, your money flow was, it was pretty negative, but it's about as negative as you can get. And so that's your perfect buy day right there. Boom. And I'm literally, you can't buy better than me, man. You can't buy it better than me. That's all you gotta say. But in these conditions, volatility being what it is, the stock could move easily up to this resistance line, back down to this resistance line. If it breaks that resistance line, it could fall all the way back down to 1. And this is very bearish. But the whole market's like that. So you have to take that into account. What those are asking that are new traders, and I've had several persons ask me this, When do I buy? If you have small capital, then your options are to throw it all at once in and hope for the best outcome, or break it into several smaller plays. And if you have $100,000 you want to put on this trade, the best thing to do is break it into small. Say I'm going to do it into 10 positions, because breaking your positions down reduces your overall risk on that total capital. The person who bought here with all their money is really hurting right now. Had they only put in 10% of their money, or 1/10 of the total position, they can buy here again. They can wait and buy here again. They can wait and buy here again, and that will save them. That will save them a lot of pain over the long run, and it reduces risk, even though your first position may get hit super hard. But those that are asking, what should I do with small capital in this trade? This is, in my opinion, this is one of the best trades on the market right now. Unless you're doing like some crazy options, spreads, and things that require a lot more money than most people have. Credit swaps and things like that. The best thing to do is to, wait for this to pull back and find out where the whales are going to start buying. Where are they going to buy? They're going to buy down here because they're there. This is a dividend stock. This is a long, people that buy for pretty much ever. They're there. They're going to show you where they're at. They're not posting on stock twits and saying, "Look how much money I made." They're there, and they are just gonna buy this thing. And I'm gonna show you some other stocks in the same area, the same sector, which are operating on the same metrics. One of the last things I'm going to say on this sector is that there's a lot of bears that came into it, be like, "Oh, look, it's going down, blah 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 blah. Look how much it's fallen, blah 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 blah." The bears really didn't show up till right about here, and they're day traders. They don't understand whales, and they just spew out their garbage. And, it's great. I mean, bring the stock down. Come on, take it down, man. I want to get rich on this. So, you have to see much deeper, a longer term on something like this than what day traders will see. This will see a bullish move until you see the MACD histogram actually show a retreating day. And right now the stock is well overbought. I shouldn't say it's overbought. It's short. I mean, this is a 3-day. It's overbought within the week, which isn't saying much. But there are going to be opportunities to purchase something similar to this. But you have to look at something like this. I mean, I bought these shares. I mean, heavy load. And, I'm going to, they're going to reduce, they're probably going to reduce their dividends or eliminate their dividends, which this particular case they have, for, 4, 5, 6 months, whatever, a year. I don't give a crap. But when they reintroduce them, I'm going to make insane dividend yields just on that. And so that's what a lot of day traders are not seeing. If you want to do an analysis on the intraday or the weekly moves, You had a heavy downside move here. It came back, it went down, it came back, it went down. Heavy support at $1, and then it moved up. And not only that, it moved up about above where its previous resistance was at. And even after hours on a 4-day or 3-day weekend, it actually traded up after hours. You have a high probability this hits the next resistance, which is around 290, something like that. But you have a high probability that's bouncing around in here, you know. And if this drops off, who knows? But my theory is I buy red days, and I buy in this case. So I buy red day here, but I also bought uh, uh, a green day here and another green day here. But that was based on the fact that those buys brought me to zero risk from this trade right here. So these two trades would not lose me money until I went below here. And then, I buy in here, which is, I'm barely negative. I'm maybe like 5% down on a very large position and doubling, tripling that position with almost no risk. No risk. There's no risk until this hit breaks 1. So, uh, that's these buys up were just speculative. Like, hey, we could have a V retracement, and this thing could continue to rip, and the bottom could be in. You know what I mean? Here, the bottom's like, okay, the bottom might be in. Here, the bottom's probably in. If it comes back down and I'm going to load even harder here, the bottom's almost assuredly in. But that's speculative trading, and that's how I trade. So if you are like looking to enter and have zero positions at all, right now I do not know if that's the best case, because your main support line is right around 225. Your hope is to make that gain to 3, and hopefully not break that 225 line. But you could have a retest of that $1 zone. So I do not know if I would throw if I just come upon this stock. But I told y'all to buy right here. You can find it. I said buy, buy, buy. I also said buy here. But this range right here, I don't know if I would say is the best. You got a 37% yield if they brought the dividend back immediately, and I will say that their book value has not dropped a whole lot, even in this crisis. They've been very smart on their positionings, and but there is serious downside possible. So anything that moves, what's the move this week? What's the move off my trade here? You're up. Yeah, the trade this week, 100% move. That's a strong weekly move. You have, well, it was like a Friday to Thursday move, but that's a long move in 1 week on one stock. And so, downside could be built could happen, because newer money is faster to leave. So you could have downside there. So if I was going to buy in, I would say, you know what? I'm going to buy here, but I'm going to expect the stock to drop to 1. So I'm going to put in like half my position here. I'm going to wait for this thing to pull back and see what happens. I do not know where a resistance point is. I have not analyzed it, but I would have to say that there's some sort of resistance right around here. It's not confirmed yet, so I can't really say that, but just looking at the candles, I would say that. But that's one thing. You cannot throw all your money at this and say, hey, I'm going to get rich. if you notice one thing about my analysis, you notice that all these lines start to compress above and they get much further apart below, which means the downside move has a lot less resistance than the upside move. You had one of the highest volume periods in this stock ever today. So volume dropping off, you have to wait and see how price is affected by that volume drop off, and that will give you more hints. We'll look at a couple other ones. I'm not only just loading this, I'm loading a bunch of other stuff. But if you look at MIT, yeah, this one's probably one of the more negative. It has not really put out positive news yet, but you know, all this trading is happening in this resistance space, which means your downside is very possible, and you have a resistance up here at 5, and until it can get through that, you don't know. But it's in the same boat as NYMT. There's the yields are very high once the stock comes back, if it ever does. And I'd break it down for you, but it's got a long-term history. So as long as the players are smart, they are in litigation, or well, I shouldn't say litigation. They're in talks to enter forbearance on some of their stuff, on some of their loans, mortgages, and things like that, positions, to kind of just wait out this whole coronavirus issue. But your MACD is low. You're starting to get back the money flow here, which is positive. But this is a real bearish symbol right here. I mean, you're like way below zero line on the MACD. So, but you do have this. Yeah, you have that MACD spread on the histogram is important. It is important. It's very important. But I'm loading that. You got TWO, which I have not been loading, but I'm still watching it because the yields aren't as high. It's a more safer play. I'm a risky trader. But these are all following the same kind of pattern right now. Same with IVR. But daily, I don't know. It's a much safer play than NYMT, but following the same pattern. All of these mortgage real estate investment trusts are really hurt right now. But they have a long history. Long history. So what do you do if you're following the hotness because stuff like NYMT and GMPT, I think it is, and such are like on the top 10 gainers lists for the last week or so. You can choose to throw your money at it and hope to get lucky. You can buy red days. Right now these are trading at basically weekly patterns. The move up. Here's a week, there's a week, there's a week. You can say, okay, I'm going to buy down weeks and hope to get lucky. I'm going to break it into 3 trades. That kind of thing. And, breaking up, you have limited capital. Well, if you want to make money in the market, you need a lot of money. The more money you have, the easier it is to eliminate risk. But, throwing your money all at one position, I would wait until the stock is showing you a clear support level before you threw all your money at it, because this stuff is moving too much at one time in one day. If you say I'm gonna take 10% risk, well, that you could get stopped out, you get taken out in a day. On 10% risk. So it's better to load long term in smaller portions on these types of stock. I'm going to show one other thing. These are 2 of my heavier, well, I should say heavier, but 2 of the things that I'm loading pretty strong right now. This is not on StockTwits because it ain't in the know. But SVC, probably one of the best trades in. I mean, this thing is insane. But again, you can't beat me. You can't beat me. You ain't beating that. Come on, ain't happening. And I don't even know how much I am up in this. Oh, I'm only up 75%. I'm total fail. Total fail. Ugh. I gotta tighten this up. Tighten it up. But anyways, these 2 are longer term REITs. These are gonna have bad, terrible news for a long time. I'm probably maybe like next year. They'll this is kind of like they're in COVID-19 status right now for a year. But they are good bets if you risky. This is insane. But anyways, I'll explain the stock to you, but you can do your own reading. You have a situation where your money flow is coming in. At the same time, you have your stock dropping, your stock going up, blah blah blah. My goodness, you can't beat these buy-ins. But they have a lot of heavy pressure. If you look at these my resistance lines here, I use that off the fib here. The fib is basically the retracement to their previous high on that move down to where it hit the bottom low. Again, you can see that you have much tighter resistance points on the way up, and you have this giant gap at the bottom. So right now it's trading, it's in purgatory. Who knows where it's going to go? You got an insane volume. It's probably the highest volume the stock has ever seen for a long time. That's insane volume. And it popped and it came back. That's an insane move. You got a 16% pop and drop in one day on a dividend stock. This thing that was insane. But this is a longer term play. This is the thing where I say, hey, I'm gonna take my position, I'm gonna break it into tens, and I'm gonna put, $5,000. I'm gonna do 500, 500, 500, 500, 500. Anytime there's a red day, anytime this thing's off, I'm gonna just buy 500. You're gonna reduce your risk. And in my opinion, this is one of the best stocks to trade. Probably one of the best positions to build ever. Like, my kids are going to be buying houses off this thing. Next one is PK. Totally vanilla. I don't know if it loads my stuff. This one I traded a little differently. I just put 2 really large positions on here because, I got other stuff to look at. So I just threw it at it. If I was paying more attention, I would have bought again here. But, you know what? I can't pay attention to everything. Yields are fairly low. But this is a fairly... this is like a no-brainer. This is a no-brainer. It's like, throw money at it, you're going to make money at it. It doesn't matter. Just throw it in there and let it sit. It doesn't matter. And you have your money flow almost breaking zero on a, in this sector. This stock is really hurting, and it will be hurting for a long time. So the fact that it's at zero on the money flow, almost about to break positive is, that is saying something. SVC, PK, those are 2 stocks that are, in my opinion, very safe, but probably much, much, much longer timeline before they show positive. Timeline on the trade, risk on the trade, positioning size on the trade, that's what makes you money. You're controlling risk, and you're calculating that risk based on your timeline and total capital. So that's all I got to say. I know it's probably not the most accurate assessment, but I'll throw some more in later on. This sector, like, PK and SVC aren't really in the same sector as NYMT, MIT, and IVR, EFC. It's another one. I did not trade this one because it just isn't. It's good. It's real good. But, you're only talking about a single bagger with a 20% dividend, 36. I caught this one a little bit late. I didn't really look into this until about here. And at that point, it was kind of like, you know what I mean? I got other stuff going. But this one's also, I'll just throw my analysis on it for you in real time. And let's see. I'm just gonna do nope. I'll throw my analysis on this real time. Guess it helps if you're on that right. This one's pretty good because you have multiple days where it was right at the top of the possible fibs. Unfortunately, trying to do fibs, I like to hit multiple price points, so I'm going to hit there. So that's pretty good. That's pretty good. It came off this bottom fib level right here. Punched through that one right there. Punched through the next one right there. It's an extremely strong move. Hit resistance right there. So you're probably going to chop here or just straight up pop even harder. But you have falling volume. The good thing is your MACD histogram is not retraced at all yet. It has not shrunk, which is good. The day that it does not keep pushing past that is bearish. Your MACD is here, below zero line, far below zero line, so it's still pretty negative. both of your 14-day and 3-day are a relative strength is pretty high, and you just busted through pretty strongly on the money flow. Um, I would look at that trade and say, wow, you should have bought this right. You should have bought that there. You should have bought that, when when it retraced back from that previous bounce. But that is really strong move. That's a lot of smart money. It's a lot of big money. A lot of whales coming in. They probably loaded as much as they're going to load, and so you could look for this to pull back. This would be a safe play on a pullback. If this ever did drop back to below 20 on the 3-day RSI, that's a good entry. But like I said, some of these are more safer plays, and so therefore you're not going to make as much money on them. But when I hear all these bears and stuff like that on NYMT, I mean, I was buying this thing before day traders even knew it existed. And that's how you know you're in a good trade. And I'm gonna make 400% on this thing, plus a insane dividend when it comes back. So look for the pullbacks, split up your trade, look at the resistance levels, split up your trades to reduce your risk on a highly volatile stock. If you want something safer, trade TWO, EFC. I could list. There's about 25 stocks in this sector, and in the safer trades, there's probably another 25. But like CLNC, that's another one right here. This is not one I bought. Much safer. Again, if you're looking to enter here, you only got about a 200% upside. You only got 200% upside. I mean, why would you even trade something if you're only going to make 200%? Come on. Another good idea to look back. This isn't a really good one, and I do not like this. This is my analysis. This is also a reason I didn't trade this, because the trend is down before we even hit any of these negative. In a bullish market, the trend was down. I do not like that. So, I kind of, as soon as I saw that, I was kind of like, we're not going to deal with that. Monthly. Here's another interesting thing to look at. And for all the bears out there, that are crying, oh my gosh, I love all these bag holders. Yeah, well, you're a bag holder because you weren't paying attention soon enough. But if we look at the 2008 crisis, if you look at this period on the stock, your resistance, your major drawdown. Now, these guys are trading mortgage spreads, okay? And in the 2008 crisis, that was the sector that was hit the hardest. In the worst time to try to trade mortgage spreads, these guys topped about 221. If you drag that all the way over here, in the worst time ever, sorry, this stuff's bunching up. So just remember 221. In the worst time ever, they were basically trading at 220. Worst time ever, 221. And you could have bought this stuff back at 1. We're trading basically at 2008 levels. And the current pandemic and crisis, the Fed is not going to allow a mortgage crisis to happen. So you have the opportunity to buy this at levels comparable to the worst time in history. So, I mean, that's really all that needs said. So, well, I mean, I know this was a long video, but you know what? If you want to win in the market, you got to put in the time. That's all I got to say. Good luck to everyone. This is not investment advice. I'm not telling you what to buy. I'm just, you can lead a horse to water, but you can't make him rich. That's what I say.